Nvidia falls on a Chinese antitrust probe, but is its dominance under threat? Welcome to Market Insight, I'm Elena Casas. It's being seen as the latest move in China's trade conflict with Washington over semiconductors, coming a few days after President Biden announced new sanctions on China's domestic chip sector. Beijing launched an antitrust investigation into Nvidia. That sent the stock down 2.5% on Monday. While China's probe looks politically motivated, there is a lack of alternatives for Nvidia's high-end chips, and the company's 70% plus margins have attracted regulatory scrutiny elsewhere. Well, for more, I'm joined now by Melissa Otto, tech, media and telecoms analyst at S&P Global Visible Alpha. Melissa, hello. Investor expectations for Nvidia's very high gross margins have been falling a bit anyway, haven't they? Why is that?
Indeed, I think, first of all, thank you for having me on. And it's a very interesting time in Nvidia's growth. Two things came out of the earnings release, and they relate directly to your question. One is around Blackwell. Blackwell is the next generation of product that they plan to roll out starting from next quarter throughout next year. And the timing of that is up for debate. And there's a lot of range in terms of how the estimates are shaking out around next year's revenue for Blackwell. The second thing is around the gross margin for Blackwell. The company pointed to the fact that as Blackwell ramps, we're going to see a lower gross margin. The investment community didn't really like that, and we've seen expectations come down for the data center gross margin for next year and the year after.
Nvidia, though, dominates the market for the most high-end chips that tech giants use to train their AI models. How long can it retain that dominance, do you think?
It's really a function of demand coming from cloud service providers. As long as the cloud service providers continue to extend their CapEx, it seems like Nvidia is the primary destination for that.
How quickly are other companies catching up, though?
It seems like Nvidia really has the dominant lead.
At this valuation, though, should investors be spending their money on Nvidia or spreading it around other chip makers? Is it still a sensible way to invest in AI?
It's hard to say that specifically, but what I would point to is that the fundamentals of Nvidia continue to be compelling. The real question is going to be, and investors should ask this to themselves, is what is the timing and trajectory of the new Blackwell product? Is this something that is really going to ramp? Are they going to hit the ground running from Q4 and we're going to see tremendous momentum from Q1 and onward next year and the year after? Or is it going to be a bumpier road? Is there going to be a bit of a lag as that transitions? This is going to be the critical question for Nvidia over the next 12 to 18 months.
Do you think valuations are stretched across the sector, or are you expecting AI to justify these numbers?
It's a function of the growth. Valuations are worthy of these heights if the assumptions around the growth make sense. If the growth is too stretched or too aggressive, then one could make the argument that the valuations are a bit high. However, if they're not, then one could make the argument in the counter argument that they're probably a bit cheap.
Looking at the wider market then, tomorrow's big news is CPI inflation, the last key piece of data, of course, ahead of next week's Fed decision. What might a hot print mean for the wider market?
It'll be interesting to certainly see how that comes in. Based on S&P Global Market Intelligence forecast, we're expecting the Fed to cut rates by 25 basis points. And I think that's aligned to an expectation that inflation will be somewhat managed coming out tomorrow.
Melissa Otto of S&P Global Visible Alpha, thank you so much. Well, that's your market insight. Don't forget, you can watch more videos on Reuters.com.